Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your financial market video, and this is for Monday, the 26th of March, 2018, and we've reached the close of the markets, and that's where you're at now. Wow. So over the weekend, Steve Mnuchin appears on TV, gives the idea that the pathway, I want to use that key word because that was an important word in what he said, the pathway looks brighter, but there's no deal with China, no non-deal. The good news was China admits and says intellectual rights should be the owner of those. You shouldn't have to transfer your intellectual property to do business in China with a foreign partner, blah, blah, blah. Those are some of the issues. What about the levies that they put on automobiles that we send there of 25%? I don't get what that's about. What about everything else the president is asking for? The good news is he got a reaction. I think that over the weekend, the president looked at a 1,400-point drop in the stock market that he owns. Remember, he's taken the credit for the big rally since he's been president. And I think he said to the boys, tone it down. And that's what he sent out his minions to do. They did it. The market gave you back a rally. But it's volatile, and I'm not convinced it's a bottom out of it. I think you're going to get like a tennis game. The president serves, it gets return serve from the Chinese. We're going to go back and forth, and this is going to be, if you will, not an easy path. But there is a path, and that's the good news. In addition, you saw us make deals with South Korea. Congratulations on that. Exclusions are happening, and they sent out our trade consultant, Mr. Navarro, to say today that, oh, he's seeing good moves on NAFTA. This is all good news. How much of it's real is what we're going to wait and see. If you take a look at the S&P 500, the Fibonacci levels, you went up over the bands you're back under. We can start removing these now, and I will. But I wanted you to see, when this was coming back, I wasn't buying into it. Could we get more of a rally back into these areas? Yeah. You're stuck in this trading range. You're stuck between this rally high that was made in January, this break low right at the beginning of February, and you're whipping around. Are you going anywhere? Basically, you are. You're down, not up. Remember that. These were the highs. This was the low. You're closer to the low than you are the highs by quite a bit. Does that mean you have to be bearish? No, it's not what I'm saying. I'm just saying where the charts are. If we take a look at the chart action right now, you're still in a down thrust. You went from 27.84 all the way down here, 26.19, you're getting a bounce. Congratulations. When you look at how the chart action is, you still have a pattern of lower highs, lower lows. That is bearish, not bullish, unless you take out under the current pattern 27.44, and that's a long way off from here. It could be hit, but it's still another 90 or so points. Have you gone into a resistance zone yet? Nope. The 100-day average is 26.95, 27.21 is the 18. Those are your two numbers, and they're getting closer to each other. What you don't want to see is a crossover where the short-term average gets under the longer term. That will add another bear wave, in theory, if you believe in crossovers of moving averages. Do they always work? Nothing always works. But you look on a chart to see what other chartists see, because end of the day, so many of them are doing the same thing. And I like being with the herd. I don't want to be the guy trying to pick the bottom here and the top here. You know why? You can't. It's really that simple. Why don't you pick the bottom here? Why don't you pick the bottom here? I can go on and on. Do you have enough cash to withstand those swings? That's how futures work. When we take a look at the Bollinger Bands, you had closed under the Bollinger Band on Friday, you snap back over it. Be careful of Tuesday reversals. Do you get follow-through? That'll be the big question. I still see resistance here. The support's the lower Bollinger Band. Momentum-wise, you're oversold. You're getting a correction in an oversold market that has the ability to go even further. Because it's oversold, the bothersome thing to me, as a chartist, would I want to sell into an oversold condition even on a rally? That'll be the question that gets answered here. But again, 2744 is the key. And that's just the key to end this leg of a downtrend. Doesn't mean it begins an uptrend. Why would I say that? Well, look at the NASDAQ, for example. Even if you rally up here to this 69.51 level, you'd have a lower low and a higher high. That is not a trend. Where do you see the potential resistance? I still see the 18-day average. Where did we see support? It went through it on Friday, both the 100-day average and the Bollinger Band, and snapped back. So it's still valid support. Got it? Yes, it took a day's lag, but it's still valid. What about the Dow? The Dow has a lot of resistance right up here at 24,722. It is oversold, but I still expect to see that act as something of a stopper if the market tries to get there. Now let's understand how much higher that is. To get up to that number, you have to go up approximately 250 points, 230 points. It's quite a bit. We'll see if the market runs into that resistance, or does it go sideways here a bit and try to work off an oversold condition. In plain English, nothing on these charts has turned bullish yet. The most you can do is negate the downtrend. None of them start an uptrend, even if they get these big rallies. To me, that's important to understand. When I come to the Russell, we have a bounce in the market, lower highs, lower lows. You got over the 100-day average. We'll see what happens if it can challenge the 18-day average. This is the market that's been stronger than the other indices. Is it because they're made up of the smaller companies? They don't have overseas exposure? Don't know. But if you looked at the European stock markets today, even with our strong markets, and last night they were acting better, wasn't able to hold. In the VIX, I saw today an interesting part where some of the analysts are thinking, as I do, that this range isn't going to be visited again, that the new trading range they're talking about, I was fascinated by it, was the 14 to 20 level. Sort of fits in with what this market's doing right now. And that means an increase in volatility is here to stay if you stay in those trading ranges. It's certainly a lot more volatility than when we were at 9 or 10. If we come to the T-bonds, what you have to be careful of this whole week is the Fed is doing a massive amount of funding. It's often at this time of the year because you're at that funny point where you have had outflows of cash. If you were a tax filer and owed money, the government's giving it back. And yet, if you owe the government money, why not wait till April 15th? And that's what so many people do. You run into this funny time of the year where you have to fund in February and March, and then magically the Fed starts, not the Fed, the Treasury. I said that today too on TV. It's the Treasury starts getting inflows on April 15th, and that gets rid of this bump that you get in the market. So pay attention to it and see if that holds up. I may not, but I'm pointing out the different things there. 10-year note ran back into the resistance. So you're noticing the narrow Bollinger Bands here, and the market's having a hard time getting through them. You always pay attention to that. Is this going to be a base or a top for the next action? We'll see. If this proves to be a top, watch out, because what stops stock market rallies are Feds. When the Fed starts raising rates too much, it chokes off the markets. When we come to the dollar index, you got a higher high, lower low, trying to break out of this sideways action, but oversold. I'm seeing this on so many charts that it's keeping some traders away from the markets. Yes, you're getting your volume traders in between, but getting follow through has been the hardest part. In the euro, you went right up to the upper Bollinger Band and ran into a brick wall. So now the question is, can it get through that, being in a position where when it reopens tonight it's going to be overbought? Because you were up, the math will carry the slow stochastic into a number over 70 that I consider overbought. I would expect the pros are taking money off the table. British pound. If you can eventually embed this market, you can continue to the upside. But right now you're overbought, running against the Bollinger Band that is pushing out. You had more sideways action, as you can see here, and the market is succeeding in trying to push that, but it needs to embed, or otherwise the overbought condition may weigh too much on it. In the end, Reversal day against the upper Bollinger Band. You went through it on Friday and came right back under it today. So again, that theory seems to have merit. You are overbought as can be. I'm looking at the March Bitcoin because the June doesn't have any volume. And as you can see, you still have the lower highs, lower lows. Again, the Japanese came in, put more controls today on their Bitcoin that's taking place there. In other words, the trading, and there's more regulation coming. And the big question is, what's the use of Bitcoin? And I did a TikTok report today for Bloomberg. And as I was on it, I asked that question. I said, I understand if you want a speculative vehicle, but what's the purpose of Bitcoin? And that's what I'm not getting yet. I do know the colleges are teaching. I realize that. But that's the blockchain that I think is more important than the Bitcoin, the digital currency. Will this become a mainstay eventually? I don't know. Right now, the market's gone from $20,000 of Bitcoin to today's price of $79.10. And remember, it peaked out, I believe, in December. That's an awful big break, and it hasn't recovered. As we get into the energy markets, you're back up to $4.50. Now, remember, if the market has a cost of shipping barrels of oil from the U.S. to Asia, and it approximates $3 to $3.50. You've got about $1.50 in there of profit, so maybe the WTI sees a pickup in that. Russia came out today and said they're in no rush, at least their energy minister did, to abandon the OPEC cuts at this point. Well, I don't blame them, but Saudi Aramco now says that it's going to come out in the second part of this year with their IPO. We'll see that. Higher lows, higher highs. The key number in the Brent, 68.58. The key number in WTI, 64.11. Both markets are in overbought territory and trading against upper Bollinger Bands, where I think bros are taking money off, not putting money on the table. Gasoline gets very interesting here. The season's right in front of us. The seasonals go up at this time of the year. We've added, last week I was reading about 7 cents a gallon nationwide to the cost of the gasoline. If you take out $2, though, you could get that break back into the support here. The question is, do you embed or not? And you let the market tell you that over the next few days. If you do nothing more, where do you think that the nat gas is bouncing from? If we take a look together here, the low of this day, 265, 264.30, the lower Bollinger Band. Oversold. This is a zone where I think the pros are getting ready to cover. On Friday, you hit 262.20. That did hit the lower Bollinger Band. You settled over it. Today, you made the lower low, came right back. So again, Bollinger Bands are things you look at. However, you also look to see if you're embedding. And both numbers are under 20 today. Both numbers are on Friday under 20, not Thursday. Tomorrow's a key day for this market. Follow through, especially a nice rally to the 18-day average, will probably get the market where it won't embed. And maybe that's a signal that something seasonally is about to occur. You have to pay attention. Pivot points. If you don't know what they are, I'd love to teach you. I put together 2 videos that show the importance of what these tools are. And basically what you're looking at is a center line, and from that, buy zones and sell zones. How to use them, why they're important, it's all there. If you don't know about them, call us. You can go to our website. You can click up here. That'll take you right to an area, fill out, and we'll get the videos right into your hand. We'll mail you the links, everything you need for them. In the meantime, I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.